Dear students, good morning. Welcome again to your video lecture. We are doing problems according to the methods of recording joint venture transactions. One is in one co-venturer books, but we recorded all co-venturers. Second one is in all co-venturers books. So that also we did problem number 3. Now we are going to do problem number 5. Look at our videos earlier which we studied. First video is definition, features, advantages and disadvantages. Second video is difference between joint venture and partnership, joint venture and consignment. Third video is steps in formation of joint venture, clauses of joint venture. Fourth video, recording of joint venture transactions and journal entries and the explained one. Fifth video is the joint venture transactions, recording joint venture transactions in one co-venturer's book. Problem number 1 and 2 I explained, but I explained recording the journal entries in both the co-venturers or all co-venturers. Sixth video, I explained transactions, recording joint venture transactions in all co-venturers. Only problem number 3 I explained in that. Now in this video, I will explain problem number 5. Okay, students. So, definition, more than 2 people for short duration. This is example of joint venture. Possibility of joint venture business. Features of joint venture. Resources, advantages of joint venture, disadvantages, difference between joint venture and right. So we will see the journal entries also in the books of co-venturers. When contribution made by the co-venturer, joint venture to co-venturer. When expenses paid through joint venture, that is joint bank account. Okay, this is for the next method. These entries are. This we want to. When goods supplied to joint venture to purchase account. When expenses were paid, joint venture to cash or bank account. When material supplied, same by the other co-venturer, joint venture to other co-venturer's account. Expenses are sales made by co-venturer, cash, bank account returned to joint venture account. Sales made by other co-venturer account returned to joint venture account. Then profit distribution, if loss distribution, and amount paid to co-venturers and amount received from co-venturers. All these entries with the reasons we did in problem number 3. Problem number 3. Problem number 5 also. Problem number 5 also same journal entries. Okay. Now we will move to problem number 5. Fifth problem. A and B enter into joint venture to ship goods abroad. A send goods to the value of 1000, pays freight 100 and sundry expenses 150. These transactions takes place on 1st January 2016. Joint venture account data to purchases account. Amount is 1000. And joint venture account data to A account in the books of B, 1000. Joint venture account data to purchases 1000, 1000, and pay freight 100, sundry expenses 50. Joint venture to cash 250. These are the entries for problem number 3. Same A and B are there. That's why same will be repeated. So in the books of B, joint venture to A 1000 and joint venture to A account expenses 250. Right. These transactions takes place on 1st January. Okay, we'll write 1/1/2016. We send goods to the value of 750 on February 1st and pays freight and insurance 80 and receives an account sales and remittances and get proceeds for a whole of the goods amounting to 2,500. So B send goods to the value of 750 on February 1st. In the books of B, joint venture to purchases 750. Freight insurance 80, sundry expenses 50, 130. Joint venture to joint venture accounted to cash 130. Here also joint venture to B account 750. Joint venture to B account 130. These transactions are on February 1st. Okay, right. Next, goods sold by B, I think. A receives account sales and remittances and net proceeds for whole of the goods amounting to 2,500. In the books of this transaction is on April for sales, I think. Okay. Bank account data to joint venture account 2,500. 2,500. A account data to joint venture 2,500. Sales are over. Okay. Final settlement between A and B made on 30th April 2016. Transactions were started in 1st January and the transaction to be closed by 30th April, 4 months. Show these transactions of the venture calculating interest at 5% per annum. Okay, that we will calculate in this. Interest calculation. Interest calculation. For A, he received sales amount just on sales, that is equal to 2,500 to 5% into when the sales are made first April to 30th April, 1 month. 1 by 12. So we will calculate the amount 2,500 into 0.05 and yes, okay. You will get the interest on his investment. The investment amount is 1250 into 5% into 4 by 12. January to that amount will be 5. And he received some advance, I think. We forgot to enter that one. He advances to A on 1st March 450 on account of the venture that we have to record. Bank account data to B account. And sorry. He is liability to pay interest on this also. Okay. Advance received. Here also A account data to bank. Is for advance paid. This is happened in the month of we'll check it. Okay. The advance is on March 1st. March to April. So 2 months interest A has to pay. Interest on advance. Interest amount is advance amount is 450 into 5% into 2 by 12. That also will calculate. So this amount, red color amount, take it. These two amounts are to be paid to joint venture. This amount is received from joint venture. So net interest is 20 minus 10 minus 4. 14, it is 6 rupees. 7 has to be received from his joint venture. He has to take this amount from joint venture, record that interest. Joint venture account data to interest. Account to B account. B interest also will be. This amount is 7 rupees. Okay. B interest also we will calculate. B invested how much amount? B. Interest he has to receive on his 880. Interest on his investment is equal to 880 to 5% to 3 by 12. February 20. Which amount will be done based on his advance. The points total amount is 15.7. So this amount is 14.75 is nothing but rupees 50. This amount he has to receive from joint venture. Total interest is same we will copy. Trust due from JB. There is no commission, and we will calculate the profit and the settlement account. Taking notes, please try to understand. Right, problem number first entry, joint venture account data to purchase account 1000. Joint venture account data to cash account 250. Joint venture account data to B account 880. Joint venture account data 750 this one. Gain expenses 130. There is no commission, but interest is there, okay? Interest account 22. By bank 2500. Here amount is 2348. Now this will be distributed, okay? So how this will be distributed equally, I think. 348 is 174 equal. There is no information about how to distribute. We will distribute in equal share. It is 174. 174. Joint venture account data 348, 174, distributed equal ratio. Joint venture 348, 174, 174. Distributed equal ratio. Now we prepare E account. Y joint venture 750, Y joint venture 130, Y joint venture 15. Total amount is 890 of this Y joint venture. Okay. 1519 amount paid to B. B amount 750, 138.80 as advance is there. By bank. That's all. So here we will update with the bank account data to B account data to bank 1519 1519. Here also so A account data to joint venture 2500. A 1000. Okay. Trust amount is 7 rupees. Profit amount is 1715. Check with the transactions 2590. A to bank. Right. Same total 2950. Okay, so that's all. That is the problem. Just interest calculated. Okay, so A invested 1250. He has to receive 20 rupees interest, and on sales he has to pay to joint venture 10 rupees, and on advance he has to pay to B 3.75, that is 4 rupees or 3 rupees. Total 20 minus 13 is 7 rupees he has to receive from joint venture. And in the case of B, he invested 880 for 3 months, 11 rupees he has to get, and an advance he has to get from A or either way 3.75, 14.75, 15 rupees interest he has to get on his transaction. Students, that is the problem number 5 with the interest. Just to check the journal entries in the books of B. A supplied goods, joint venture to A. A paid the money, joint venture to cash, A for expenses. B supplied the goods, joint venture to purchase 750. B paid the expenses, joint venture to cash 130. B advanced to A to bank 450. And there is interest is there. Total joint venture interest 22. That B interest is 15, A interest is 7. Goods sold by A 2500. Profit we got 348 to be distributed to A and B equally. That is 174 and 74. And we prepared B account in the books of A. We got 1519. And we prepared A books in the B ledger, A ledger in the books of B. Also we got by bank to A account 1519. Okay, students, simple, very simple when you understand in good manner. Bye, students. We will meet in our next very important question. that is joint bank account opening and closing the joint bank account.